I am courageous. I am daring. I am intrepid. I am educated. I am prudent. I am wise. I am business savvy. I am discerning. I am cunning. I am a multi-millionaire. I am financially prosperous. I am opulence. I am generous. I am charitable. I am a philanthropist. I am a piece of the Creator. I am a part of God. I am connected to the Source. I am infinite. I am boundless. I am immeasurable. I am wonderful. I am impressive. I am magnificent. I am a magnificent speaker. I am a brilliant communicator. I am a master at speech. I am an overachiever. I am outstanding. I am a go-getter. I am a massive success. I am a wonderful leader. I am walking brilliance. I am charming. I am charismatic. I am a pleasure to be around. I am infinite wisdom. I am broad intelligence. I am total understanding. I am wise counsel. I am creating more prosperity. I am producing endless joy. I am now creating a magnificent life. I am healthy. I am wealthy. And I am wise. I am brilliant. I am magnificent. I am genius. I am exuberant. I am happy. I am cheerful. I am joyful. I am overjoyed.
All right, let's start the session. How are you doing, guys? Let me know if you can hear and see the screen. Everything is great. Let's start the session. That was a little affirmation to get your mind ready for the webinar. So the reason I have this writing is I'm planning to share this for YouTube as well. I can't help a lot of people. So why not helping your brother or sister, not losing money or making money? Well, majority is losing money. So now, before we start about anything technical about this M's or W, we need to understand a simple concept that why these M's or W formation are patterns that actually important, and it's a trap pattern, right? So this M formation or this W formation, which a lot of people call it as a double top or double bottom or whatever you want to call it, because the fact is that the name of them doesn't matter. What you call them doesn't make you rich. Someone told me, I don't trade letters. Okay, good for you. Like, you really think I go and look for something that looks like an M? That's stupid. And try not to be that guy. So what is happening in the process of forming an M or W is that the majority or retail trader looking or believing that that's how market moves by making higher highs and higher lows, right? So these higher highs and higher lows simply can be a reversal and forms an M formation. So how can you figure it out this different? Because based on what I just said, every single higher high will eventually looks like M at some points, and then it would be higher highs. You see, you can see this as an M. It's not always market, push. A lot of time they play angle, and during this playing, you can see a lot of M's and maybe a lot of other letters, not only M. So now let's talk about support and resistance. When market hits a level and then came back down. Oh, sorry, my bad. I gotta move this a little bit. No. Sorry. So let's say this high being formed and then this M formation is happening. Okay, something we want to see it as an M. So retail trader will see this as a break and retest. So what they believe is happening, it's an upward move, that it's going to continue going up. All right, same thing with W formation. This, if in previous candles this zone was acting as a support, or basically price had reaction to this area, and then this W is forming, while this W that you are seeing for retail trader is a break and retest. So now it comes back to where I said you can call it double top and double bottom, and then trying to, because retail traders see the pattern. Like when I talk about M formation and then someone call it double bottom or double top, so I know he's the retail trader. So I want to trade M's or W when he don't see it as a top or bottom, he see it as a break and retest. You understand this point, guys? You need to trade M's or W, not where retail traders see it as a reversal pattern. You have to trade this, while retail trader seeing it mostly as a break and retest. That's the most powerful kind of M or W formation, which mostly happen using a signature trade. What is a signature trade, guys? That usually when you try to take the signature trade, you want to see a wedge formation, and then there would be a high, right? There would be a high that was hit, and then now price consolidating in that zone, right? And then breakout, form M, and drop. This is nowhere near double top or double bottom for retail trader when they draw their trend and shit. But for us, when it's above the high and act as a break and retest, I'm interested about it. So many times they came here, reject this resistance, and then induce. So many people are happy that they took a signature trade. It didn't even reach the high, but they saw M formation and they're in a little bit of profit, and then bam, they didn't wait for stop on. They took a M where retail trader was seeing it as a double top at the resistance. But if they would wait, this would break out, then forms an M, then the new M is a break and retest, and then it will fuck them over. So you want to be right here, guys. You don't want to be here. You don't want to be double top and double bottom trader. That's retail. Avoid being retail trader. You know, avoid it. That's how you win. So now let's go to charts and see some other example. If for more information, guys, message me and I'll share with you the 3-hour free M and W course by Dylan, which goes in even more in depth, goes into, you know, liquidity provider and everything. Perfect session, guys, for the course. So now let's find something here. All right, this low being formed, right? Low of this day formed, and then, well, didn't give us the signature trade. It did actually give us the signature trade. I'm trying to have it, you know, plain, no DMA or any EMA. Okay. So now this high of Friday in Monday was broken. So now you could take this as a M. You have a railroad track. They give you the confirmation and then they give you, you know, they induce you, because now market maker knows there's people that are aware about market maker. And actually market maker already knows, I think, that there is some of them that are actually so good and actually they can't trap them. So when that's the case, trust me, they start creating traps for, you know, the people who trying to be that guy, trying to be that, you know, the guy who catch market maker. So they basically push to the side, form M, and then give them candlestick confirmation and then stop hunt them. Then what happened to this stop hunt? The zone is broken. So now you can take this wick as a first leg, and then this candlestick confirmation as second leg. Enter right here, put your stop loss even above right candle that you enter. That's 3 pip. That's 3 pip. And I don't have any DMA, EMA, nothing of other my magics in here. But let me show you here. Retail trader will have it as a support and resistance, guys. They don't have freaking highs and lows of the day. They have support and resistance. You see, this is a perfect support. Retested the trend line and touched this as a resistance. Ooh, I'm so good. I know all technicals. You know, let's sell. Gap. What happened? Okay, let me take it. Market is coming back. They opened gap on my order. You know, I lost a lot of money. Now they're going up. Let me see if this zone will hold it or will break it. Oh, broke it. Let's buy and stop hunt. You know? So that's how this game works. You don't need to find the M that is like, you know, super cool. When it comes to this, you know, super valid, when my 2-year-old dog can see that M, I'm not taking that M. You know? So try to take the M's that, you know, retail trader don't see it like you see. That's how you get good ones. Now let's find another, you know, example that I'm not trying to show you guys, you know, as I said, there is a course that Dylan has. I'm nowhere close to Dylan to give him, give you a better information the way Dylan does. So what I'm trying to do, I'm trying to show you how, filter these M's or W and try to not get trapped in, market maker traps basically. So now it's another one in here that it's actually the good one. Now, about the weak field, this weak field, if you don't know, is basically, well, most likely, it's not a rule, it's just a theory, that when there is this wick in here, means market was trying to stay at this price, but lack of liquidity made him come back up. So what they have to do is create liquidity so they can come down. What they do, act as this zone was rejected, and then act as this is a support, start inducing people, and then form W right here. By the way, nothing wrong with taking this W since it broke this, break and retest in second leg, and it's a multi-session one. It's good, right? So this M is not good. Nowhere near good. This is some type of thing, they form it, and then the new guy who just learned about M or W is happy, and what he saw most of the time that these M's goes 200 pip in profit. This is like 40 pip, and he's just waiting for consolidation, and then they come for him, right? If he be really new, he didn't catch it right at the top, he jumped around here, so his stop loss is around here or here, so he'll get it. You know that they already got it here. You've been there. So now back to here, this wick need to be filled, so market maker trap liquidity so he can go down. Look at this, stop hunt. Now this is where things get beautiful. You see, now retail trader are seeing consolidation. Okay, let me just put this up here for a bit of time. Okay, now retail traders see this, I'm just gonna keep it here, as a zone that is being respected, rejected, and then broke, right, came back up, broke this zone. You see how they induce people. You see session open right before London open, they pushed the price almost 40 pip. And notice this is NZD, so the ADR for this pip is like 50 pip. But they pushed it like this, broke this resistance, retested, came for this, going back up. But now it's when you apply those M's or W rules. You quickly say, okay, first leg here, let's see if the second leg will break this. Second leg didn't break it, engulfing candle, sell right here. So now, right, same candle that is a sell for you, if I put it here now, when you are in profit and you are actually put your stop loss in break even, is where retail traders see a bullish candlestick confirmation at the support to buy, and then price just moves in your favor. All right, so don't be retail trader. Try to get the good M's or W, and these M's or W can be found with signature trade very well in form of continuation as well. What do I mean is like this. So market maker is trying to go up. We already know that they trapped here. This is actually a signature trade too, but it was a massive stop hunt, honestly. If you put the low even here, it was massive stop hunts compared to the pair we are looking at. W formation. Notice again, this W formation is acting as a break and retest. And you want to take it when retail traders start being like, yes, sell, 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 sell. That's when you want to say buy, buy, buy. And then that's what's happening. And what's going on in the next day? This is example for continuation pattern. Now what's going on? What's going on? Can somebody tell me what's going on? Yeah, this resistance is holding the price, guys. Why can't you see it? So this support is holding the price. Now people say, okay, resistance is being formed. Now a wedge descent, whatever, forming. So if you just Google it now, well, not this wedge. Wedge formation Forex. Just gotta go to image. And then what does it say? You guys can see, right? Stop. You see entry, target, stop. They all telling you to buy it or sell it. Whatever breakout happens, you buy or sell it. Find a head and shoulder or whatever. That's all I'm showing you. See? Now, they say it's going up and then wedge forms, breakout, and then it's going down. All right, let's see if that's the case here. Resistance is holding the price. And then it coming to the wedge. Asian session consolidation trap time. 8 to 10 hour trap right below this resistance. And then induce people with this, bearish candle. Now let's go down. Let's see. This was where price was holding the low and then break this low, retested the low. Now this is where you want to say, okay, break out of the wedge and W formation. I'm looking for a candlestick confirmation. Oh, can I see it? Yes, you can. And then you have 1 hour time to enter and have your stop loss right below the low for 5 pip. Or go for 10 pip stop loss. Below this low is 36. I personally don't take it. So for me, 10 pip, I'll risk it 10 pip, no problem. 10 pip risk and this reward in Friday. All right. I hope this lesson helps you, not get trapped in this, don't give your hard-earned money so easy to these bastards, honestly. Like, I was talking to one of my students about this signature trade, and I was just showing them this, how often this signature trade happens. And that's actually ridiculous. That how often they just, days after days after days, they just keep forming this wedge, trap everybody. And you still, after all this time, you still don't see one that have the, Forexia signature trade that says, wait for, break and retest. I'm just going to keep scrolling down. Show me if you see any of them is giving you, what the hell? So by this information out there, and you just think it's a common sense, guys. Why the hell market maker will give you the right information so you can make money? Like if your answer to my question be like, oh, they gotta do it, why they give me the wrong information? Trading is not for you. This is a business. And if you are not a businessman, and if you're not the person who apply the business rules in the anything, you are not good for trading. You got to accept it that this trading is not for everybody. It can be for everybody who's willing to change. Unless you're willing to change, this trading is not for you if you cannot believe what I'm saying is true. Well, you can backtest it too. All right. Let me stop the recording and answer some question. I hope you guys enjoyed it. Peace.